Hello folks, welcome to Pro Trader Strategies Market Commentary for Tuesday, June the 1st. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I talk about the economic data, the geopolitical environment, how those come in to impact the markets with some of my market analysis. I'm going to do the same thing in these daily market commentaries, but I also talk about my option strategies that I implement into my portfolio based on the assumptions I come up with in my market analysis. And for you folks, we've streamlined that process for you to find the optimal option strategy for any given assumption. And what I mean by that is we aren't just looking at a long call for a bullish assumption. What we're doing is we're looking at the underlying, seeing the pricing, and that determines whether we are going to be buying or selling options, right? Good custodians of capital, we determine if they're expensive or cheap. That helps us out there. I show you how to spot that quickly in those market commentaries, so please check those out. All right, without further ado, let's get on with economic data. Yesterday, Monday, holiday here in the United States. Not a whole lot of economic data to talk about here or across the pond, but today we got the final manufacturing PMI numbers. Remember, we got the flash estimates. That's the big one we're looking for on these PMI Purchasing Managers Index, forward looking. Anything above 50 expansion, anything below 50 is contraction. Last time around, we got everything above 50, and there isn't really much of any revision going on other than the German final manufacturing PMI came in slightly higher than expected at 64.4, expected to be 64. So that was really the only major revision there. Now, moving over here to the United States, we got some, actually a couple of other things real quick. Consumer Price Index across the pond flash estimate coming in a little hotter than expected at 2%, expected to be 1.9%. And the core Consumer Price Index in line with expectations at 0.9%. Now let's move back over here to the United States, because we are looking at our final final manufacturing PMI. This was out of the flash estimates. We also get our ISM manufacturing PMI. That's more important to look at for us. Manufacturing for the flash estimates, the final number came in slightly higher. This number for the ISM coming in at 61.2, expected to be 60.8. Good to see there. Construction spending, flip side, coming in at 0.2%, lower than the expected 0.5%. So we'd like to see that ramp up. Well, we got the revision to last month's number. It originally came out at 0.2%. We got it revised up to 1%. So that is absolutely going to make up for the headline number there on the construction spending number that we got today. And then the ISM manufacturing prices paid coming in at 88, which is slightly lower than the 88.9 that was expected. Now, across the board, we're seeing pretty much higher prices, higher gas prices, food prices. And so it's a bit of a conundrum to see some of those ISM numbers, prices paid, coming off a little bit. And then we have Bernard speaking in a couple of hours here. All right, so let's get on with the economic data, or on with the overall markets here. We've got crude oil moving higher despite the fact that we've got some OPEC meeting we've got the OPEC meeting going on today. It looks like they're going to ease on some of these sanctions where they've cut back on production. It looks like they might reinstate some of those production quotas, meaning there's going to be more oil coming into the system. Well, are we going to see that demand gobble that new supply up? Well, it looks like the market is anticipating this reopening trade. We've got Vegas basically completely opening, full swing right now. So a lot of people are really starting to hop on this reopening trade. And is crude oil going to do well this summer because people are getting out and driving around? Well, that's what it's starting to signal, despite the fact that we might see some more production increases coming out of OPEC. Then we've got the rest of the markets. Gold futures pretty much unchanged. The broader markets, big swings today. Bitcoin up $400, but unchanged for the most part for Bitcoin. And we've got the bonds about a ½ point off on the day. Now, keep in mind, this is some of the highest, at one point was the highest interest rate we've seen in a couple of weeks or several weeks now. So the whole bond issue, are we going to start seeing higher rates going forward with the economy start to get back into full swing here? Now, VIX starting to spike here because we were seeing the equities in positive territory earlier today. As a matter of fact, The NASDAQ was up up almost 100 points on the day, starting to see weakness throughout the day here and in the Dow Jones Industrial Average. Again, only up 100 points on the day, where they were up several hundred points on the day off the open. That opening trade just started seeing weakness, probably due to some of these economic data points maybe not getting revised as well as everybody was expecting. But I think the reopening trade is taking a bit of a back seat right now. You can see overnight with the economic data from across the pond, this is the final service or the final manufacturing PMI numbers that we've really already seen. They just came out in line with expectations, but as soon as the markets open today, you can see the weakness starting to filter into this equity market. That's causing the VIX to start spiking. A lot of charts showing some signals for bearish setups here, and I'm going to be talking about in the webinar this week. We're doing bearish setups, and it looks like the market is going to accommodate us quite nicely with a lot of different opportunities coming on. All right, so let's talk about some of the things that I've done based on this. Now, this was off the open. Friday got that nice big pop. It was on their earnings. They beat on earnings, but is it overdone to the upside? We started seeing some weakness, so I decided to get involved playing this to the downside, adding some negative deltas. So I went into the August and bought the 210 puts in there for $3.40, and that was nearer to the lows. I'm looking for the market to come back and maybe cover this gap. The way the chart setup is right now with these two counter-opposing dojis, it is not making me feel as comfortable as I was earlier this morning with a confirmation. So end of the day today is going to be something that I'm going to be having a very close watchful eye on CRM or Salesforce. Any trade above yesterday's wick, I'm going to be pulling a ripcord on this. But you can see that we are looking at this as swing type trades, and we've gotten a little overextended to the upside here if we look at this as a neutral type trending underline. So looking for it to roll back over just a little bit. And with XLU, I covered this trade. Remember, I put this on just for a little bit of a swing trade, and I had sold some calls in here, short calls in the June, 68 calls. That would have been basically a new all-time high, especially when you add in the credit that I was able to receive for this trade. That got me in to a level where I was above the 52-week high. So you have to take your strike plus the credit you received in order to get your break even. So I sold the June 68 calls, right? So that's where I'm willing to sell XLU. But then I collected 39 cents for that trade. So that puts my break even at 68.39. And as you can see, if I have my break even at 68.39, the all-time high is 68.05. My break even is thus above the 52-week high. The great strike location, had some high implied volatility, which is why I did the short calls in this trade. With that said, I had a working order in there to get out at 5 cents or a nickel, and I was able to do that today. So a pullback in XLU with that trade worked out quite nicely, doing the short calls in XLU, and added some negative deltas with my CRM. So those are the only true trades that I've done so far today, adding some negative deltas with that setup. Now we're going to keep a watchful eye on that because the charts are starting to look a little bit different than they did when I got into this. So that is, when we're looking at a swing trade, we got to make sure we're staying true to what we're looking at in those setups. All right. So I show you how to do that also in these videos. So check that out at Pro Trader Strategies. That's all I got for you guys. If you've taken anything away from this, please smash that like button for me. It really does help. Other than that, I hope everybody had a great weekend. And if you don't smash that, take that. Bye for now, and take it easy.